Talk about updates on the fund.
Sure.
Okay. All right. Away we go. Well, welcome. You're listening to The Best of Investing on Talk 910. I'm your host, Edward Brown, along with my co-host, Mark Hanf of Pacific Private Money, one of California's fastest growing mortgage investment firms. And Patti Cohen is going to join us later on in the show. Our phone number is 888-912-1190. Use that number to answer the trivia questions for 3 vacations given away during this show. Vacations are not sponsored by the radio station, but by Lighthouse Resort and Marina, located 1 hour northeast of San Francisco. Those vacations are free. They're only a request a $75 cleaning fee to cover the housekeeping expenses. Today's trivia theme is miscellaneous trivia. Mark, we're going to get right into it. What do you got for us today?
Well, it's the end of January, Edward, and so a lot of the year-end figures are now starting to spill in. Some of the shows we were doing at the early part of January, we were talking about predictions for 2016, and we'll talk a little bit more about some of those. But what's interesting, as I said, so we've got some of this, year-end 2015 information sinking in and or filtering in here, and one in particular, which I follow closely, and we talk about this pretty much on a monthly basis here at the show on the Best of Investing, and that is the Case-Shiller Real Estate Home Price Appreciation Index. And what I found interesting is that for the most part of 2015, San Francisco Bay Area home prices were holding pretty steady year over year at about a 10% appreciation rate. And we were talking throughout most of 2015 about the expectation that that rate of appreciation was going to slow down. And what would a normal appreciation feel like? 5-ish%, which is interesting. That's the national appreciation rate. Nationwide, home prices have been year over year up about 5%. Well, the year ended. Well, actually, it's through November because Case-Shiller there is a little bit of a lag time, but for all intents and purposes, I think we can pretty much call this the 2015 home price appreciation according to the Case-Shiller index, which is one of several indexes that track these values. Case-Shiller being one of the most popular. And anyway, it ended up 11%. So not only did it not slow down and not trend downward, it bumped up a little bit. So year over year, through the end of November, we were 11% higher in San Francisco. And, it's interesting, in their analysis, and they always have a little bit of an analysis section, they talk about how businesses in the oil and energy sectors are suffering, from the 75% drop in oil prices over the last year. And moreover, strong U.S. Dollar is slowing exports. And, housing has been, the one really strong component of the economy, but the analysis suggests that housing is just not large enough, even though it's probably one of the largest components of the economy. It's just not large enough to offset all of the weak spots. And so we just had another meeting of the Fed this past week, and they decided not to increase, which actually was a surprise. I thought for sure they would bump it up another 25 basis points, 0.25%. That
I'm glad that they kept it the same. I was a little concerned about the economy, and I think it was a very smart move.
Well, and if you're a real estate guy like we are, we like low interest rates. I'm still looking forward to refinancing one of my properties, and it's not quite ready yet for that. And I was holding out hope that mortgage rates would start spiking upward as I go.
They haven't, have they?
No, they have not. They're still right at 4%. And so we talked a little bit about this with Rob Spinoza on the show a couple weeks back, where we had that increase of 25%. The Fed raised the short-term rate in December. And there was a slight reactionary increase in long-term rates, the 10-year rate, which is really the basis for the price we pay for mortgages. But that settled back down again because we're right now you can get a 30-year mortgage for about 3.95, I think is the average.
Awesome.
Yeah, so that's still a great rate. So another interesting little tidbit from the same article was the rent forecast for 2016. And again, looking nationwide at what, actually this is from Zillow, not from Case-Shiller, but Zillow released their rent forecast for 2016. And they are still predicting, even though they're saying nationwide, the quote-unquote good news is that the rate of increase for rents should be slowing down. The hot areas, such as the San Francisco Bay Area, if you're renting, you could probably still look forward to continued rent increases. Again, this is a blended average, but they're predicting by the end of 2016 that rents will be 6% higher than they are today. So not quite the 10% plus appreciation in rents that we were seeing in the San Francisco Bay Area.
You know, I thought it was really interesting. I can't remember where I read this, but they were talking about rent control and how it's not very effective. And one of the reasons is because people who have rent control stay in their apartments. They don't want to move. So it's less inventory out there for new people coming in.
You know, there's a lot of pros and cons. And of course, if you're a real estate investor, it's mostly cons. But
even if you're a renter, because I mean, if you're
if you're a renter, don't expect your landlord to put a lot of money into your apartment.
Yeah, I mean that's a huge part. But if you're looking for an apartment, you know, all the other rents are going to be really high.
It's like, what, you got roaches? Oh, they taste good, chocolate covered.
Very good.
So, but interesting, you know, again, it talks about for the San Francisco Bay Area, you look at, you know, rents continuing to increase, maybe not quite as much as they have in the past, but the other part of the whole rent issue here in the Bay Area is that on average, according to the statistics, is that the average renter pays 40% of his income in rent.
And that's of his net pay or gross?
I'm assuming this is gross versus
that's
net.
Worse.
Yeah,
because you still have taxes taken out too.
Yeah,
that's terrible.
So 40% of your income going to rent, you know, that also is going to, you know, constrain housing growth because, you know, part of the, you know, expected growth in housing is the conversion of renters from renting to owning a home. Yep. And when rents are as high as they are now, that puts a real constraint on people to do that conversion unless they get a great down payment gift from uncle or mom and dad. So again, these are all interesting, you know, aspects of the economy that kind of play into why there's so much you know, concern about the direction we're going. You know, we got decreasing oil prices. That's good for the consumer, but not good for other sectors of the economy. We've got continued appreciation in pricing, which is great if you own real estate, but if you're trying to get into real estate, how does that help? Wages, as we've known, we've talked about, they're staying relatively even, and unless you're working in the tech sector. So there's just a lot of unknowns there now, and so 2016. I mean, my own personal belief is that we're going to have a pretty decent year in the economy, largely because it's an election year.
Yeah.
And so, you know, in election years, magic tends to happen that keeps the economy rolling. And of course, if the Democrats want to stay in power, they're probably going to do a few things here and there that from the presidential side that might keep that economy humming.
But a second-term president, you know, because he has to leave,
right,
is a little different than if he was just trying to get reelected.
Definitely different.
Okay, so before we cut to a break, I want to ask you a quick question about. You're a lender, private lender. Mm-hmm. How do you approach, let's say someone comes to you for a loan who says, I want to buy a house specifically to turn it into an Airbnb or a vacation rental by owner. How do you analyze that?
So that would be a business or investment purpose loan, number one, as opposed to a consumer loan. And why that's important is because there are different regulations on those two types of loans. And generally, there are just two types of loans from the eyes of a lender when it comes to how that loan gets underwritten and documented. Is it for a business or investment purpose, or is it for a consumer purpose? And a consumer purpose would be, you know, if they're buying a home to live in as their primary residence, or they already own the home and they're looking to refinance it or pull cash out for a consumer purpose like debt consolidation, et cetera. Whereas pulling money out of your home to invest in other real estate to flip, that's a business purpose. So these are all things that in the new era of Dodd-Frank regulations that are intended to protect the consumer, these are important issues. And so we look at that. So if someone comes to us and say, I want to buy this home and fix it up and rent it out as an Airbnb, as opposed to renting it out to a family for, say, like $5,000 a month, they think they're going to get $15,000 a month on Airbnb. And in fact, in San Francisco, I know people who own rental property who and those are the exact numbers. That, in fact, I know one family that they said they could get like $6,500 a month for this home, but they're making close to $20,000 on Airbnb. Now, it's a lot more work, right?
Yeah, sure.
There are expenses against that. You have housekeeping and such, and
Yeah.
you have to manage all of that, and you have to, manage the website. So
And
there is,
worry about the regulations that are going on.
right. So maybe somebody in the family, one of the couple, is managing that, or they pay someone to manage that. So there is. So it's not 20,000 versus 6,500 free. But it's still substantially more.
So how do you look at it as a lender? Though?
Well,
do you put much stock in? I mean, like effectively, it's like a mini hotel.
Well, when we're looking at the likely ability for the borrower to make those loan payments, and so while we might prefer a lease, an existing lease, or a signed lease contingent upon remodeling of the property, for example, would be one thing. And really what we're looking at when we make a loan, and most private lenders or hard money lenders, when they make a loan, they're looking at can the borrower afford the monthly payments? Do they have the income, either their existing W-2 income or other investment income? What's the likelihood that they can make that payment? The other thing we're looking at is depending on what loan to value they're looking at in terms of the loan. If they're looking for a 70% purchase loan, or is it maybe a 50%? So the more money they put in, the less concerned we are about how are you going to make the loan payments, because they're putting in such a significant chunk of capital that we're not worried that they're going to default on the loan.
Gotcha. Well, also, I guess one way to look at it too is if they're not successful doing Airbnb, hopefully they'll turn it into a regular lease.
And that's just it. If they struggle with Airbnb, or it turns out to be more work than it's worth for them, renting any home out in the Bay Area is not a struggle. So again, from a lender standpoint, we're going to look at that application favorably, assuming that it looks like the borrower has some competence, some experience, looks like he appears to know what he's doing. Maybe he has experience, maybe he owns other property. There's a lot of variables you can look at.
Give out your information before we go to the break.
So Pacific Private Money, we're at pacificprivatemoney.com. We are your alternative source for real estate financing. When the bank says no, we say yes. That's Pacific Private Money, and we're at pacificprivatemoney.com. Or call us 415-883-2150.
Okay, before we cut to the break, we do want to make a quick mention. Good old Neil Diamond tribute is going on February 5th, and tribute to Frank Sinatra is February 6th at the Lesher Theater in Walnut Creek. The price at the venue is very pretty, and the prices are very reasonable. So check out the Lesher Theater in Walnut Creek for Neil Diamond tribute on February 5th and Frank Sinatra on February 6th. So here's our first commercial break trivia question. Who was the first author to write a novel using a typewriter? All right, the first caller with the correct answer wins a free 3-day 2-night stay at the Lighthouse Resort. Call 888-912-1190 to answer that question. Stay with us. You're listening to The Best of Investing.
Okay. How long was that?
That was 1:45.
Okay, so we'll do a short second one. And why don't you ask me a question? And let's do one like, just thinking of it right now, it's a fund question.
Okay.
I'm thinking about investing your fund, but concerned about the size of it. What happens if your fund grows too large and you can't lend out the money? What will that do to yields?
Gotcha. So that could be an email question.
Yeah.
You've been having a good week. You know what? I've been praying for you. I'm seriously. I pray for the company, you, your family. Just kind of.
Oh, that's.
Yeah,
appreciate that, Edward.
Yeah,
That's
just
great.
keep the loans going. The
Well, I just
integrity,
said that to
calm.
you because that's
Yeah.
every little bit helps.
It does.
And knowing that sometimes helps alleviate a little bit of the.
Yeah, no, it's true because I was talking to David too about it. I go, if anyone deserves it, it's you because you work hard, keep keep your integrity high. You stay focused, try not to go to the left or right like that, and that's what successful will follow you.
Absolutely.
Okay. All right. Answer this, and then we'll get ready to your question here. Well, welcome back to the Best of Investing. I'm Edward Brown, your host, along with Mark Hanf of Pacific Private Money. First commercial trivia question we asked was, who was the first author to write a novel using a typewriter?
I'm sorry, I have no idea.
Mark Twain.
Oh, is that right?
And he wrote Tom Sawyer.
I probably should have guessed.
Yeah, I was going to say that was not a trick question. It was one of those easy.
I like the song from Rush, Tom Sawyer.
Oh, okay. Well, next time we have a music question, we'll ask
There we
that.
go.
Okay, so Mark, we got an email. It's kind of a long one, so I'll kind of just summarize it. Basically, it says, what happens if your fund grows too large? What happens to the yield to the investors?
Good question. So maybe that's someone who might be interested in investing in our fund and is wondering whether we'll be able to maintain the yields that we're currently paying.
Exactly.
So Pacific Private Money, we have a mortgage pool fund that in 2015 paid out 8.2% to its members on a monthly distributed basis.
Non-leveraged.
Non-leveraged fund. So it is a what's called a 506 Reg D fund, which probably doesn't mean anything to many of you, but it's a very common format for the way mortgage funds are created and regulated. So we have grown our fund to just under 15 million in the last 3 years, and we're looking to grow that fund to 50 million, assuming that we continue at the pace that we've been raising capital. We believe we'll be there in approximately 2 to 3 years. Contrast that with the volume of loans that we originated at Pacific Private Money in 2015, and that number was 70 million. Approximately 150 loans. We did a little over 150 loan transactions for a total of $70 million. Now, not all of those loans were funded by our mortgage pool fund. In fact, our mortgage pool fund wasn't large enough to be able to accommodate that loan volume. So we made the loans, the overage, we made those loans available to our high net worth individuals who like to invest in individual notes, which is also sometimes known as trust deed investing or note investing. And depending on the appetite of the investor, some have a preference for investing in either a mortgage pool fund because they don't want to have to compete and study and look at individual notes and drive properties and read documents and all that stuff. They just want the 8% yield. And then there's those who they like the control. They actually, maybe they're full-time note investors, and many of them are. So depending on your preference. And so to answer the question about what happens to the yield as the fund grows, well, we believe that number one, our goal is to grow, and at Pacific Private Money we have been growing. We did 60 million in 2014 and 50 million in 2013. So we've been growing at approximately 10 million annually in new loan origination. And so our goal for this year is actually more than $80 million. We're looking at growing upwards of 100 million with our sights set down the road for being 150, $200 million fund. Probably not B for I'm probably not going to use the B word here, billions, but because there's a size at which I feel that we would be comfortable in our growth attainment. But when it comes to yield, we believe that we will continue to grow and see a growth in loan demand for privately funded loans, ones that can be funded quickly and painlessly. And again, because of Dodd-Frank and the new stricter banking guidelines and lending guidelines, I don't see that ever turning back the tide to the easy money days of 2005. I just don't see that happening in my radar. And so I believe our business model will be sound for years to come.
It reminds me of when the stock market crashed in 1929, the margin, people could do 10 to 1. They realized, the Fed, or let's say the governing bodies realized, that's way too risky. The most we'll let someone leverage is 2 to 1. So you can buy, $100 worth of stock, let's say for $50, and borrow the other 50. And that hasn't changed since 1929. So there's some things that probably won't go back because it's too risky, and that's, I think, what you're talking about with regard to the lending guidelines that in 2005 just made it too easy to borrow.
Right, and so when we talk about, what type of yield do we believe we're going to continue to pay our investors, you need to remember that past performance is not a promise of future results, but we believe at Pacific Private Money that we will continue to be able to pay our investors a yield in the 8 to 9% range with a target somewhere in the middle eights. Certainly for this year, and in future years, I believe that it will stay consistent. Only because if anything, interest rates are going to gradually increase over time. Number one, and number two, we believe our deal flow will continue to increase. We think we will continue to see more and more loan applications for short-term bridge loans and other types of financing products. And so therefore, as our fund grows to 20, 30, 40, 50 million, we believe that we're not going to struggle with deal flow. And I will tell you that there are two components to being a private lender like Pacific Private Money. One is deal flow. How many loan applications do you get on a daily basis? And the other is capital. Where do you get your capital from? Yeah. So, and we've been able to maintain a very good balance over the years, and we've been around since 2008. So we're looking at our 8-year anniversary coming this spring, and we've always been able to maintain a really, really close balance between access to capital and how often the phone rings on a daily basis.
Also, if somebody wrote you a large check right now, it's not like it would go into the fund working immediately.
Right, new money doesn't dilute the fund. New money waits on the sidelines, earning nothing until we have new deals to fund. And so that might take as little as a few days to, we've had, an investor at one point had to wait 6 weeks for his money to go to work. Well, 6 weeks might seem like a long time, but you're not getting anything in the bank anyway.
and once it's in,
it's in.
Yeah.
And now he's thrilled that he's getting 8% on an annualized basis on his money. So he didn't mind the wait.
Very good.
For more information, our fund has its own website. It's pacificmoneyfund.com, pacificmoneyfund.com, or call us and we'll send you some information on how the fund works. 415-883-2150.
I think one of the things I appreciate about it too is the average loan to value in the fund is less than 60%. What is it now?
It's 55.
55%.
Just working on the January figures right now.
So you've got a fund that is unleveraged, that is 55% loan to value, and you're paying net to the investor because there's no fees to the investor of over 8%.
Yeah, 8.2 as of the end of the year.
And why don't you tell the audience right now who maybe have never heard this before? Let's say I'm in the fund, but I want to get my investment back for whatever reason.
Well, our business model in our fund, unlike many other funds, is we do short-term loans. We favor our portfolio of what's currently 55 loans is mostly short-term loans that will pay off within a year, as opposed to mortgage pool funds that are making fully amortized 20 or 25 or 30-year loans. We have a lot of liquidity. So, like for example, this week we had about $1.2 million in cash in the account. So we've only had to handle a short number of redemptions, and they were done almost immediately. So the redemption. Now, if there's a run on the bank, so to speak, something horrific happens. Obviously we're not intended to be a liquid fund because most of the money in the fund is tied up in real estate secured loans. But assuming that real estate market doesn't move that quickly, that there'll be an opportunity and a strategy for being able to liquidate those loans over time. But assuming that the economy goes as we expect it to go over the next few years, even with the cycle in the real estate market, the fund is designed to be more liquid than most funds, and that we don't expect it to be to take long to redeem someone's membership.
Okay, so when a loan pays off, then you go ahead and look and see who wants to redeem first,
right?
And then, which I know that can also kind of limit your growth, but I think you're going to have a lot happier clients.
Absolutely.
On that.
Again, for more information, go to pacificmoneyfund.com.
Any specific deals you're working on? Because I know that the audience keeps going, I wonder how they're getting 8%.
It's funny. My guys are crazy busy this week. I actually had to fly out of town to a conference end of the week and didn't get a chance to sit on the end of week loan pipeline meeting. But we have, I'm told, about $10 million in loan applications total, and that was after a fairly slow, mid-December to mid-January. our firm, as well as others who I talked to, were all saying about the same things. Right around December 15th, phones stopped ringing and the deals kind of stalled. And then right around January 15th, all of a sudden, everybody wanted to close like tomorrow. You know, so it got pretty busy. So we're continuing to see, Edward, a mostly people who need to close quickly. Short-term bridge loans for people who want to buy a home now and sell their existing home later. Those are the ones that we're mostly seeing. We got a couple of, there's always the odd ducks. We got a vineyard loan application there that's a refinance of existing private debt. We've got a bunch of applications for seconds, which we take a very hard look at if we like it. If there's a lot of equity in the property, oftentimes we'll go ahead and greenlight those. Those are usually smaller loans. They make up a much smaller portion of the fund portfolio, usually less than 10%. What's interesting is the hard money loans of 10 years ago. We don't make those borrower in distress type of loans. So it's if there's a distress, it's a timing issue. It's like I'm going to lose my deposit on this home I want to buy now that the bank told me they can't close on time. Can you help me?
Well, I appreciate
we do that a lot.
You're not taking undue risk, which is very important.
Right.
Any last words before we let you go?
Give us a call, 415-883-2150, or visit either of our websites for information about our fund. Go to pacificmoneyfund.com, and for general information about how you can get a fast and easy bridge loan, or our brokerage website is pacificprivatemoney.com. Both websites will take you to the other one. It doesn't really matter. You can even go to markhanf.com and get my book for free and other cool things. So I got all kinds of websites out there.
Excellent.
It's good to be ubiquitous.
Yeah, fancy word too. And don't forget to check out our friends at Pacific Trade Exchange is what I'm trying to say.
Yes.
The barter business. You got to check them out if you're interested in doing some bartering. All legal, and these guys are pretty good. Brian Capehart's a decent guy there. All right, here's our second trivia question. Why does the interstate highway system require at least 1 mile in 5 to be straight? So 1 out of every 5 miles has to be straight. First caller with the correct answer wins a free 3-day 2-night stay at the Lighthouse Resort. Call 888-912-1190 to answer that question. Stay with us. You're listening to The Best of Investing. We'll be right back.
You gave me 2 extended segments there. I kept thinking you were going to cut me off there, so it's good.
I wanted to make sure you caught your plan.
Yeah.
Okay, so let me do.
Well, I don't want to short.
It's so fun,
Well,
so
thank
easy.
you.
He's kind of a master at managing it because it's really very timed, and he
He's
flows
like a
through
doctor
it.
with a bedside
That's
manner.
it.
He is. He's a
Right.
surgeon. He is like in there, and it's really
If I
masterful.
need you to be quiet and you're not, I'll throw the pencil at you.
He never loses his temper.
No,
He never
that's
gets
it.
impatient. He's got to keep it right on it, and he
Try to-
shows up like I'm telling. I need glasses. Where's my
You
glasses?
you made the room smell nicer. I just want to.
That's
Oh,
right.
thanks.
You definitely did. That's for sure.
Good.
Edward, just tell me when. If I need to clear my throat for any reason or whatever.
Then just like that.
Right.
That way they can know.
Yeah.
And then go ahead and get really close. And what we're gonna do is I'm gonna
Almost kiss it.
almost kiss it, and I'll be able to tell on here how long it is.
Weird. Oh.
I know they're a little strange on that. Okay, so I've already gone. So Mark and I did the first 2 segments. So when I come, what I'm gonna do is I'm gonna come back and let's see here. How do I do this here? Okay, so okay. So when I come back, I'm going to ask this trivia question that because I already asked this way when we cut out to the break. I asked this trivia question: why does the interstate highway system require at least 1 mile in 5 to be straight? So I'm going to come back and say, "Welcome back." Blah blah blah. We're joined Zoom. We answer the trivia question, and we'll go right into it. Now, just so you know who the players are, Patti is the most successful real estate agent in Marin County, and Mark Robbins.
Sort of.
Hang on.
I know you're not.
Now, Mark is going to talk about non-recourse loans for IRA property purchases.
Oh.
So it'd be kind of interesting if we're talking about buying in your IRA,
Oh, I was just
real
fascinated.
estate,
Yeah.
which it's going to say a lot of things there. So
18 years ago, I was so excited about doing that. I never really, anyway, it didn't happen, but
Yeah.
I like leverage. But anyway, yeah.
And so some of the stuff that Mark had written down here is, these various questions. What's a non-recourse loan?
Yeah.
Why is it required? What are the typical terms for these when buying property with an IRA? How long does the loan process take? What types of property can an investor purchase? And what are the tax advantages to buying property with IRA funds? Awesome. These are great questions for the show.
It's such a fascinating topic because I've noticed that people, the general public, don't know anything about it.
Correct.
It's been around a long time, and it's fascinating. And I don't see it happen. I've never done a deal like that.
Okay.
I mean, in my own
Yeah,
career.
no, I understand.
Yeah.
Okay, and then
You're a virgin in your own right, too.
What's that?
I'd say you're a virgin in your own
Yeah.
right.
For that?
You've
Yeah,
never done it.
exactly.
and you've got some good stuff for
Yeah.
us too.
Yeah.
Okay.
Well,
So-
cash sales are huge right now, figuring out why, kind of where are we in the market, all that, yeah.
And so each of these segments, we're going to do about two, roughly 10-minute segments. Yeah. Yeah. Two different 10-minute segments. Okay. So we'll kind of bounce around a little bit between you for both segments. That's why that way it's not all manipulative.
Yeah,
Sure.
And one of the questions, the
Yeah.
best question to ask right now is when is the best time to sell? Because really, all year, right now is. And so all year I said mid-February, so here we are.
Oh, okay. Because the question I was going to ask, I picked one of those because you have great questions on it. One of them was going to be, what is the best way to prepare my house for maximum ROI? What kind of things should I be doing? But do you want me to ask that
Do
one?
that next, well, no, right now. When's the best time to sell? I don't want to say mid-February, mid-March.
Well, really, you're coming into the best time of the year. Typically March to June, from what I know. But, I just sold my house in December,
Where was it, you were in?
Nevada.
Oh, good for you. Who was your agent?
Howard, Howard Wynn.
Oh, I love Howard, but yeah, we're in the same company, yeah.
Yeah.
Howard's a good guy, really.
Yeah.
Okay. Are y'all ready?
Y'all ready? Yep.
Okay. So again, just, is this close enough to you?
Yeah.
Okay. And so, and try not to touch it. So if you can set it like that and just go like that, you'll be perfect. And
I'll
you'll-
hold myself back.
Okay, and you'll know, because if you talk like this, you notice how you can't really hear anything?
Yeah.
Yeah. So that's how that keeps you on track. And I think I did start this, but it's good stuff to check. Yes, I did. All right.
I actually like speaking to the mic because it makes my voice sound stronger
There you go.
than it is.
We wanted to have Mark on, I guess 2 years ago, but at the time you were going through your
Larynx
Oh,
issues.
wow.
So
You sound
you've
good.
You've made a huge comeback. All right, then I've got a couple of little announcements I've got to make here before we get right into. So here we go.
Okay.
Ready? All right. Welcome back to The Best of Investing. I'm Edward Brown, your host, and we are joined by Patti Cohn of Pacific Union Realty and our guest, Mark Robbins, who we'll get to in just a minute here. But we have to first answer the trivia question, which is, why does the interstate highway system require at least 1 mile in 5 to be straight? And,
Safety.
well, no, it has to do with they are usable as airstrips during a war or emergency.
Very interesting.
Well, it has to do with safety.
Yeah, that's true.
Landing safely.
Landing safely, exactly. Okay. So now, before we introduce you, Mark, I do have to make a quick little announcement here, and this is for the Roman Spa Hot Springs Resort in Calistoga. So the Roman Spa Resort provides an authentic terme experience centered around the geothermal waters, which come directly from the source and pipe into their naturally hot pools, offering a level of relaxation and healing that transcends the ordinary. With 60 charming guest rooms, it's a perfect choice for a peaceful retreat, a weekend getaway with girls, or the ultimate romantic holiday. Guests of the on-site spa will be pampered by the attentive staff who will design your perfect spa experience, transcending you into a state of complete relaxation. Consider their Calistoga traditional mud bath. If you've never had one of those, they're really cool. A complete healing experience followed by a full body massage in an intimate private setting. Call 800-914-8957 or go to www.romanspa.com HotSprings.com. Check that
I'm
out.
writing that down. It sounds amazing.
It's incredible. Go to their website.
Exciting.
Exciting. Okay, so now in the studio here we have Mark Robbins. And why do we have Mark Robbins? What do you do, Mark?
I am a commercial mortgage broker. I help people obtain financing for commercial real estate and IRA real estate purchases.
Okay, so now we're talking specifically about IRA purchases of real estate. And why don't you get into, first of all, they have to be non-recourse loans, don't they?
They have to be non-recourse loans. The IRS requires that if you are using your IRA money to buy real estate with a loan, or shall we say leverage,
Okay.
you have to get a non-recourse loan, which means that you're not personally responsible for paying that loan back. The IRS does not want the individual being involved in personal guarantees when they're using money that hasn't been taxed yet.
Okay. They were trying to protect the public, sounds like.
Well, they're protecting themselves too, because if there's any self-dealing with the IRA funds, that person could be subject to penalties and taxation.
Gotcha.
And if you want to use your money to buy real estate, and you're borrowing to buy that real estate, it's got to be a non-recourse loan.
Okay, Patty, do you want to ask Mark any questions on this? I've got a few other questions.
Well, I truly find that fascinating, and what I have noticed is the general public does not realize that you could use your retirement money to buy real estate. I think that is just, it should be on the front page of every paper,
Yeah, it
because
should.
people don't know it.
Yeah.
And by the way, I think people also don't understand what a non-recourse loan is.
Yeah.
Maybe you want to say what that is.
Well, again, non-recourse means no personal guarantee, no personal responsibility. If there's a default in payment on the mortgage of that loan, the only thing that the mortgage holder can go after is the property
No
or the
personal guarantee.
income that the property produces.
Gotcha. And what are the typical terms for these types of property?
Yeah, there's only a few programs available if you're borrowing money to buy real estate with your IRA. There's a 3-year loan, which is amortized over 20 or 25 years, and then fixed for that period of time, and then it would change or adjust every year after the first 3 years. There's a 5-year fix, which also is fixed for 5 years, amortized for 20 or 25, and would adjust once a year after the 5th year. And then there's a 20-year fixed. 3-year loan, interest rate's about 4.25%, 5-year loan about 5%, and the 20-year fixed usually a range of about 6 to 6.25%.
So if anybody's interested in buying real estate inside their IRA, they would go to you to help them get the loan?
Well, that's what I do for a living, yes. I'm a facilitator. I know who the lenders are and how to put together the right kind of loan package. I know what the requirements are, know what the lenders require
Yeah, because
in
a lot
order
of
for them
lenders
to qualify.
Yeah, a lot of lenders won't even touch that kind of loan. will they?
Well, I can tell you, I've been doing this for 12 years, Edward, and let's just say 999 out of 1,000 lenders will not grant non-recourse loans
Yeah.
for the purchase of 1 to 4 unit properties
Gotcha.
in the United States.
That is absolutely true.
Yeah.
And in fact, it makes zero sense for any individual to go direct to a lender, because most of the people sitting at those desks have no idea
Yeah.
what this is about.
Yeah, they'll say,
And there aren't many people like you that even
Exactly.
facilitate it.
Yeah, they'll say, you can buy real estate in your IRA? I thought, Joe, I could buy CDs. You know, yeah, that's something a lot of that.
Well, just like investing in stocks, you can invest in real estate with your IRA.
Okay.
You just have to follow the rules.
How long does it take, the loan process?
You know, the loan process is not much different than a conventional loan, usually 30 to 45 days. I always recommend that if people get into a purchase contract, they put it out to at least 45 days just to be safe.
Okay, so if somebody is trying to buy a piece of property but needs a fast closing, then they probably should go to Mark Hanf first and get that loan so that they can get the deal,
Yes.
and then they can refinance with you. Can they do that?
That's absolutely correct.
Okay.
Yeah. If they need private money, they want to do it fast, there's certainly a private money specialist like Mark would be the person to go to.
And what are the tax advantages for buying the property in the IRA?
Without being too wordy, this is a more complicated subject matter. However, I don't pretend to be a tax specialist. I always recommend that the investors speak with their tax specialist. However, there's unrealized business income tax, which is the tax on the monthly income, and then there's unrealized debt financing, which is the tax on the long-term gain after you've sold the property. So regarding what they call UBIT, unrealized business income tax, first $1,000 of profit goes back to the IRA tax-free. After that, the percentage of the income that matches the percentage that they put down on the property to buy the property goes back to the IRA tax-free. In other words, if they put down 50% to buy the property, then 50% of that profit, that monthly profit, goes back to the IRA tax-free. The other 50% gets taxed at a trust rate of about 35%. So for every, let's just say for every $100 of profit after all expenses have been deducted, $50 goes back to the IRA tax-free. The other 50 gets taxed at approximately 35%, which I believe is the trust tax rate. So that's about $17, $50, $18. So on $100 of profit, they're paying about $18 in taxes.
But they're able to purchase real estate in their IRA using leverage that they ordinarily wouldn't be able to use.
Exactly.
Gotcha. Is there any limitation, like what types of property can the investor purchase?
Well, I've done, I don't know how many of these non-recourse loans over the last 12 years from coast to coast, but the typical purchases are 1 to 4 family units, single family houses, duplexes, triplexes, fourplexes. I've helped investors with all of those property types. I've also helped with apartment buildings where it involves more money, higher loan amounts, which causes the number of lenders to dwindle. There aren't that many lenders that do non-recourse loans on apartment buildings.
I mean, to me, the whole big thing is, as Patti was mentioning, a lot of people don't even realize that one can do this in their IRA. A lot of people want to invest in real estate, and they're not going to pay cash for a $500,000 building, let's say.
Yeah.
But they like to leverage. And I mean, is there a minimum you have to put down?
There are minimum loan amounts. Most lenders will not do loans under $50,000.
I mean, percentage-wise, like, will they do a 70% loan to value?
The majority of all the lenders require 40% down.
Okay, so you're
So
about
60%
60%
loan to value. Yes.
Okay, we're going to cut to a break. This segment went very fast, actually. So, Mark, if people want to buy real estate in their IRA and they're going to need a loan broker to help them get the loan, they should call you. How do they get a hold of you?
Well, I'm easy to reach. I've had the same cell number for over a decade, 415-309-1803.
All right. Thank you very much. Stay with us. We're going to go with Patti right after the break. We're going to get into all this good real estate that you have to talk about.
Thank you.
Okay, here's our third and final trivia question. Which famous person invented the scissors? All right, don't answer that now, because I can tell you think you know the answer. All right, stay with us. You're listening to The Best of Investing. We'll be right back. Okay.
I just sent a quick text now that I'm only going to be here a half an hour.
Yeah, this one's fast because again.
Well, you moved it along pretty fast, Edward.
It
You're
does.
good.
Well, thanks.
You segue very well.
Thank you very much.
Yeah.
Oh, it's amazing.
Yeah.
I can write for my classes on this. So is this done at 4:30?
This will be done at 4:30. Yeah.
I can actually meet you at 4:45. Okay, question mark.
How did that sound to you?
4:45.
I think it sounds pretty good.
Okay.
Yeah, it looked good on the levels here.
Okay.
So yeah, I think it worked out. I think well. And you gave a lot of good information.
Yeah, you got pretty rapid fire questions. So you gotta,
No, you came up with some
I
good
try
ones.
not to be too wordy because I have a tendency to.
Well, and then radio, you don't want that either.
No. No.
So we want to keep the audience engaged.
Absolutely.
That's the whole idea. We want that good radio.
Yeah.
All right, so let me figure this out here. All right, Patty, you ready?
Yep. I don't have glasses on, so it's gonna be harder. Let's see what I'm doing. It's
If I
kind of
had
funny.
glasses, I didn't.
I know, thank you, because those readers, they're like dollar store readers, like, you don't have them. Don't you need glasses? Don't you have readers or anything?
You left glasses here last time. I think they took them.
No,
Sorry.
Dollar store, it's okay.
Here, go like this.
I used to, I know. Um,
A quick announcement here after our thing, and then we'll be ready. Here we go. Welcome back to the Best of Investing. I'm Edward Brown, your host, along with my co-host, Patti Cohen. Mark had to leave a little early today. Mark Hanf had to leave a little early, but we have Mark Robbins still with us.
Still here.
Third and final trivia question. Which famous person invented the scissors? Anybody?
Edward Scissorhands.
No.
I was gonna
Leonardo
say
da Vinci.
Oh,
Invited.
Woohoo!
Pretty good. Okay, quick thing here. The Monarch Cove Inn. If you're, there's another great place if you're looking for an idyllic weekend getaway or unforgettable spot to celebrate life's happiest occasions. The breathtaking Monarch Cove Inn stands on a 100-foot cliff overlooking Monterey Bay. So they have 9 rooms, an alluring Victorian house, and 2 cheerful standalone cottages. Secluded on a quiet road, the Monarch Cove Inn is a relaxing few minutes of walk to Capitola Village, which is a beautiful place. Check them out at www.monarchcoveinn.com. All right, Patty, what do you got for us?
Well, the market is waking up again, as you know, as usual. December's really slow, January's really slow, and then we had rains, which we're all excited about for the environment, but people don't want to put their houses on. But it's just starting to pick up, and if you think, you know, year over year, it's probably 8-point-some% over last year.
Yeah.
So since really mid 2012, we've taken a huge ride up in appreciation.
Well, this kind of leads into the email question we received for you, which is, when is the best time to sell?
Oh, absolutely. I like all year I wait for right now to be able to say, truly right now. My opinion, and more than my opinion, I've looked at bar graphs for decades on buyer demand and supply,
Okay.
and they do follow each other, but the tightest and best time to put your house on the market is mid-February.
Right
And
after the
that-
Super Bowl?
Yes.
Okay.
Because the general wisdom of sellers is, I'm going to wait till April or May, because I look prettier then. My house looks prettier and
Yeah.
everything else.
Weather's good and all that.
Yeah, but the truth is, the buyers come out. They come out, you know, the beginning of February, and they are, some of them are, you know, pent up demand from last year,
Yeah.
and they're hungry and they're beat up. Some of them are fresh and eager, and realizing, oh my God, there's nothing to buy. So everybody's hungry, and the sellers are just asleep, you know, making themselves pretty for the spring when they get to compete with everybody else, and some of the pent up demand has been absorbed. So it is the one time, and the truth is, every time's a good time, because buyer demand and supply really pretty much follow each other.
Okay.
But it's the best. It really narrows right now.
But now, how many, I mean, we know that you are the best. You're the smartest agent in Marin. How many other realtors know that?
You know, people, I'm always, my listings always come out early. They really do. And when I talk with sellers, I mean, honestly, people are like, just wait till spring. And I mean, like, I think in life, watch what everybody's doing and do the opposite.
Yeah.
And so, yeah, buyers are ready, sellers aren't there, and it really doesn't matter if their flowers are blooming, because guess what? Anybody that comes out right now is competing with the same people who don't have flowers,
Ah, good point.
and their house is muddy too, all of them.
Yeah.
Yeah.
I guess the theory is still you want to get the highest price, you know, when it looks the nicest. You know, how many people go when it's gray outside and, you know, think that they're going to have to, you know, pay the top dollar. They go, this house doesn't look so good. Well, it's gloomy and gray. You have to kind of check it at all times.
Well, that is the thinking, and you really have to be pretty brave to put it on right now, because that thinking does make sense, except when you think that buyers are desperate and afraid that they're going to be pushed out, and they go looking for houses, and there's 1 or 2 to choose from. They're going to snap that one up.
And I can see also from a buyer's perspective, you know, if you wait till spring, you realize, oh, everyone's going to be going at the same time. So, yeah, you want to catch it early.
Yeah.
That's really smart.
Yeah, and I mean, some buyers will just wait till they're all out, but then it's everybody just, you know, the masses doing what the masses do, competing with each other, and sellers competing with each other, and
Yeah.
right now, right now. And I don't really mean like mid-March or mid-April. I'm talking about right now. Talk to an agent right now. Start getting the house prepared. Get it in the market in the next couple of weeks. And don't put it on Valentine's Day and 3-day weekend. Just skip that weekend. Yeah, because it's a 3-day weekend. It's Valentine's Day and it's the beginning of winter break for a lot of schools. So don't do that weekend, but the next is fine.
Yeah, because you want to come out fresh. You don't want to have it, quote, stale, being on the market for a week or so.
Yeah, I mean, I'm bringing them on 2 listings next week, and there's nothing in their neighborhood, nothing.
Now, next week is Super Bowl.
That's okay.
Because a lot of times the wives will go out to check the properties and then bring the husbands back next week or something like that.
Well, I think the general public puts too much emphasis on us and open houses, and I can see why, because that's all they see in terms of activity.
Yeah.
But
most houses go because the broker's open, don't they?
yeah, they go on the broker's open. Everybody's online, so they don't have to wait to see a sign. Like the old days, you had to kind of see a sign in your neighborhood. Now you get an alert in real time when a listing comes on.
Gotcha.
And for say spring break or Valentine's Day, people are away for the weekend. But Super Bowl, they're here. They're just not going to go to the open house. But they're still shopping. Their agent can still take them. They're still ready to go.
That's a good point, because I know a couple of people who have free Super Bowl tickets, and they're not even going to go because of the traffic and everything else. They're going to stay home and watch it.
Amazing.
They should sell the tickets.
I'll tell you exactly.
The average price of the ticket's over $5,000.
I know, it's ridiculous.
Yeah,
Something
crazy.
Well, speaking of that, crazy numbers, I got a request from another agent who said they've got a client looking to rent a house for the Super Bowl week for $200,000. That was the budget.
Really?
Yeah.
Let them rent my house.
I know. And they're not going to have parties. There will be guards. It's a very high-profile person. I don't know who it is. But then in another conversation I was having with somebody from San Francisco, they said, yeah, I had a client that did that, and they really didn't make money, believe it or not.
Why?
Because there was going to be parties. They moved all of their furniture out. They painted the house. They moved all of their furniture back in. They repainted. I mean, we're talking a mega kind of house with a little, I think, extreme kind of maintenance. But I'm not really in that league. So, painting going in, painting going out, the storage.
Yeah, that would be a little ridiculous. Of course, 200,000 can go quite a long way for something like that.
I'm thinking for a week.
Well, it's funny because I got a building
Yeah,
down.
I'll take 100.
Yeah, I've got a building literally one exit away from Levi Stadium. And I'm thinking, I wonder if I could rent my parking lot.
Wonder if you sure.
I don't know.
Oh, there's no question.
I don't know how to do it though.
Just get a kid out there and
Put it on
stand there.
Craigslist or list.
But how are they going to get from there to the stadium?
Like,
Okay,
how far away
shuttle.
is it from the stadium?
One exit away,
Uber.
less than a mile.
Let them call
Yeah,
it
yeah.
Uber.
I guess.
Hire a bus. I mean, you can make some money because you hire a shuttle. You got a kid standing at the gate taking the money. You got a shuttle putting them in, and you put it on Craigslist. You post it online. You put it on Airbnb. You do an app where they can just pay.
Wow. I hope I'm not too late. It's next week.
No,
Oh,
you
you
can
got
do it.
time.
You
You
can do
got
it.
time.
I got time? No, I'm going to do that. We'll have to talk about that. Okay, we have one more minute before we have to leave. Patty, before we forget, how do people get a hold of you if they want to put their house on the market early?
Oh, please do. I'm master at this time of year. Patti Cohn, 415-722-4842. I'm with Pacific Union International.
We have to call it Pacific Union International now. Okay.
I should have been the whole time.
That's okay. Well, that's all right. If people just go to Pacific Union,
Yeah,
they'll still find you.
they'll find me.
Good. And your website, or you're on our website, bestofinvesting.com. You can always check that out too. And I got to say, Patti is definitely one of the most informed and intelligent realtors.
Why, thank you.
I know that from experience. I've known you, gosh, for 20 years now? It's been that long? You haven't aged a bit.
I know.
I have, of
Time
course.
flies when you're having fun.
Yeah. And again, Mark, why don't you give out your information for people who want to get a hold of you?
Mark Robbins, Lending Resources Group, 415-309-1803.
Okay, so if you want to buy real estate inside your IRA and you need a loan, the regular bank ain't going to give it to you. You got to go and call someone like Mark.
Welcome your calls.
All right. We are going to cut out for the day here, and here's our thoughts for the day. The Queen Elizabeth II cruise liner moves 6 inches for each gallon of fuel it burns. Is that a waste or what? I would think with inertia, you just push it, it goes a long way.
Wow.
What do I know?
6 inches?
6 inches
Wow.
for every gallon. And American Airlines saved $40,000 in 1987 by eliminating 1 olive from each salad served first class.
Wow.
No.
Wait, how much money?
$40,000. That's
Amazing.
a lot of stinking olives. I don't even like them.
I don't
You're
either.
going to save a lot by one me. Okay, tune in next week to The Best of Investing. We're going to be giving away more free vacations for answering trivia questions. Thanks for listening. On behalf of our team, I'm Edward Brown, and wishing you the best of investing. So long.
That's
Check
awesome.
out.
If we did it like this every week, I would be thrilled.
Oh, really?
It's
Okay.
the best. Short and sweet and focused. Oh my
So
God,
I-
was that